Okay, so thanks everybody. It's really a pleasure to be here. I'm Steve Flaim. I'm Senior Advisor and Investor in Residence with the Heart, Lung, and Blood Institute Innovation and Commercialization Office. And my task here today is to help you think about how to reach out to investors and how to engage with them in the best way to do a pitch. So before we get into that, I always like to spend a few minutes talking about the ecosystem, the funding life cycle of companies. So if you assume that you form your company here at the left edge of the graph, the vertical axis is cash from revenue. And if you follow the heavy line here, this is obviously you're spending more than you're bringing in, so you're negative. And then at some point, your company starts to raise revenue here roughly, and your revenue increases. You cross the zero line here, and if you're really successful, your company makes money and you become a mature company. And of course, across the top here are the different stages of the company. So really early stage companies out here on the left, sort of mid stage, and then growth and mature companies to the right. What's really important on this slide is, and I'd like you to focus on, is the fundraising or the funding sources. So early stage companies usually are self-funded, friends and family, very early stages. And then at some point, they start to engage in our ecosystem here with NIH. You start to engage with NIH maybe through phase 1 SBIR, STTR funding. And as you grow, you maybe get phase 2 at some point, as shown down here. And then at some point, you actually get to a point where you actually have to raise money from private capital investors. And this is usually in this late pre-seed, seed startup phase here. And this is where you're going to probably need to be talking to angel investors. Now, I'm assuming that the majority of the folks on the line today are either pre-company or they're fairly early stage. So you're likely going to be in this range here. Maybe you're in the angel investor stage, but probably not too much beyond that. What comes after angel investors are engagement with venture capital investors and potentially strategic partners. These are formed companies that are interested in your technology and may want to partner with or purchase your company. I'm going to spend a few minutes talking about them, but the majority of the discussion I'm going to have here is about angel investing and how to reach out to angel investors. Okay, so let's say a few words about venture capital investors. In the US, they invest about $25 to $50 billion a year in companies. And these are funds that come from investor groups. They're managed by partners, venture partners. The actual money can come from wealthy families or from hedge funds or insurance companies or whoever wants to invest in this particular sector. They invest in portfolio companies. The typical investment size for a venture capital firm, maybe a smaller one, would be in the $3 to $8 million round, maybe 10 million or more that's syndicated among a couple of different venture capital firms. These tend to be in later stage companies. They are looking for exits in 5 years with something like 15 times or more return on their investment. And when I say exit, I mean the investors or the venture capital investor receives their initial investment money back with a 15x return. So they're making money on this investment. They will participate in follow-on investment rounds. What's important here is that venture firms tend to invest in companies that have a valuation about $10 million or more. The bigger and VC firms are more than 10 million, but the early stage investors are probably in the $10 million range. You can understand whether what the venture capital firms are doing by looking at their websites. And usually they report what their portfolio companies are. Some firms don't invest in healthcare investments, others do, and you can figure that out from their website. In order to reach out to venture firms, you need warm introductions. just don't send them a cold email trying to get them to be interested in your technology. A really good way to find venture capital investors is through their website, the National Venture Capital Association.org website. And so those firms are all listed there, and their websites are listed, and you can go to their websites and see what kind of companies they're investing in. So this is the venture capital investors. These are probably folks that would be interested in your company later on, but not necessarily where you are today. Strategic investors are established companies that have a strategic interest in your technology or your company. They might be seeking to partner with you to help you develop your technology, but with potentially having rights to your technology at a later stage. They will provide funds to move the technology forward. They are mostly looking at development stage companies, and valuation is less important. So as opposed to venture capital firms, valuation for strategics is not really something that they are too concerned about. They're looking for technologies that have relevance to what they're doing, or maybe they have a strategic reason for moving into your area of technology. And a lot of times you can interact with these through incubator or innovator programs that are established. For example, JLabs has an innovator program, and they give you a lot of exposure to potential strategics. And also at science and business meetings, there are people who wander around, we call them prospectors, and they're looking at technologies that are being reported on at these meetings and that might be of interest to the company. And then they also attend pitch competitions at national science and business meetings. So you can easily run into them at those meetings as well. But I really want to focus more on the earlier stage investor groups, such as the angel investors, because I think that's where the majority of our companies here today are sitting. What's important to realize is that angel investors invest about the same amount of money annually as do venture capital investors. It's $25 to $30 billion a year. These are wealthy individuals. They're usually investing their personal funds. They do this on a part-time basis. They often invest as parts of organized groups. They invest time, money into portfolio companies, and their typical investment is something an individual is going to typically write a check for $25,000, and this is going into a round that's going to raise about $750 to maybe $1 million. That's kind of the typical investment for an angel round. They will invest in early stage companies, as I mentioned, as well as later stage. They do understand the need for follow-on investment, and they have a very strong interest in the exit strategy and what the total investment is going to be after the angel rounds in order for you to be able to exit your company. So you need to be able to think about how you articulate that particular issue. A couple of things to think about here. Angels, like venture, they need to be convinced that they're going to get their return on investment. In this case, it's like 10x return in 3 to 5 years. So you need to be able to convince them that that's going to happen in order for them to invest. Obviously, not 100% of their investments do that, but in order to get them to engage, that's really a critical point. And it's part of the sales job that you have to do with investors. So the typical angel investment, again, is $1 million round. Valuation is probably going to be in the $3 million range. So if, for example, if your pre-money value is $3 million, if your company is worth today $3 million, and you raise $1 million, your post-money is $4 million, and the angels that invested own 25% of your company. And this obviously dilutes the founders, but in exchange for dilution, you have cash that you can use it's invested at a very high risk stage. And they also provide valuable advice and experience. And this is something that you get with angels that you don't necessarily get with venture. One point I want to make clearly here is about non-disclosure agreements. If you're going to be talking to angels and actually VCs as well, they generally will not sign a non-disclosure agreement. And the reason is that they see too many deals And their integrity is really key to their ability to do their business. So they're really not motivated to steal your technology, but you have to trust them. They usually will not sign an NDA. However, there are circumstances where an NDA could be signed. So for example, during the due diligence process, a company may have a very key piece of intellectual property that's maybe a secret, that's fundamental for the investor to understand that they really have something significant. And in order to make the investment, the company will maybe insist that there is some kind of an NDA to be signed. And so the investment group will assign one individual from the due diligence team to sign an NDA and to view the technology and then to report back to the investment group that, yes, they do have something significant here. I'm not going to tell you what it is, but it's significant and you can trust that we should move forward with the investment. So that does happen, but it's not very frequent that you see that. And then the final point I want to make here is that when you send a business plan or a pitch deck to an investor group, don't include any proprietary information in that, because generally speaking, this is going to be public information, and only under very specific circumstances would it be okay to include proprietary information. Okay, now let's talk about the elements of a pitch. So first, I want to talk about the typical investor pitch. So it's usually somewhere between 6 and 10 minutes, a live presentation, maybe in front of a group of investors. Maybe it's a closed session, maybe not. And then it's followed by 5 to 7 minutes of Q&A. And usually it's in a live setting these days, but we've just gone through 3 years of COVID, so we've had a lot of virtual meetings like this. So as a company, you need to be prepared to do either of these or both. The audience in most cases is mixed. It includes investors, but it's not 100% accredited investors. Some of these folks will have technical expertise that is relevant to your technology, but many may not. And so you need to be able to convince and communicate with folks in the audience who are looking for a good investment but really don't specifically understand your technology. So you don't want to flood them with too much data. You want to give them a pitch that is understandable. The presenter should be the CEO of the company, or at least the person that's leading the company, maybe an acting CEO. And so don't read your presentation. You need to deliver it in a cadence that is understandable with a degree of enthusiasm. And this is extremely important, the enthusiasm concept here. And I'll just say that we recently had a pitch competition here in San Diego where 8 pitches were delivered, and they did an audience ranking and selected the winners. And on the stage, they had a podium and they had a microphone that could either stand on a stanchion at the podium, or you could pull it off and hand hold it. And there were 2 of the 8 pitches where the presenter grabbed the microphone, pulled it off the stanchion, and walked out to the front of the stage and got really close to the audience. And guess what? Both of those presenters won the competition. The presenters that stood behind the podium didn't win. They were all good technology, but I watched that happen, and it just reinforced for me how important it is to speak to the audience and be enthusiastic and get out there and really sell to your listeners. And the last point I'm going to make here is that in a short pitch like this, you don't need to substantiate every assertion that you make. You can say what it is that you believe to be true. You don't have to show data for everything. Just say it and move on. And if they have questions about that, they'll come back and ask you, and then you'll have more time to answer those questions. So other important things to consider, and these things tend to trip up people sometimes, use a widescreen PowerPoint format. This is what I'm using today. It fills up, it's a widescreen uh, slide. There's a letterbox slide that you can get in PowerPoint. It's not very professional. Use the widescreen format. Include slide numbers on all your slides, because during Q&A, the audience may say, well, on slide, whoops, I didn't know what slide it was. And so you need to have slide numbers so that they can read them and ask questions about a specific slide. Use your font sizes that are readable from the back of the room. And in many cases, people on virtual meetings are looking at small laptops. And so you want those fonts to be big enough so they can read. You should have ample use of bullet points, and your bullets should be one-liners and not necessarily full sentences with a period. You got to reduce the amount of words on the slide that you're forcing the audience to read while you're talking to them. So the words on the slide should enhance and be followable versus what you're actually verbalizing, but don't fill the slide up with lots of words. Don't include unreadable notes and references. A lot of people put references at the bottom of the slide, and they're just unreadable and they're distracting, and you don't want to do that. Be aware of technology traps. When you go to a live meeting or even a virtual meeting, you got to preview the setup. In a live meeting, look where the screen is going to be located. Is it going to be behind you or to one or both of your sides? Will there be a monitor in front of you? Will there be one on the podium? Not all the time does this happen. And sometimes you're up there with a microphone and you have to keep looking around over your shoulder to see the slide that you're trying to present. So be prepared for that. Don't rely on being able to use a pointer or a mouse. I'm using a laser pointer here and it's really handy, but this kind of setup is not always available when you go and do a session in front of an investor audience. So be prepared to lead the audience through your slide verbally as opposed to using a pointer. Backup slides and appendix slides are usually not available during a pitch session. There'll be a Q&A, and if you feel like you need to pull up a backup slide, it's probably not going to happen, because usually during a pitch competition, while you're doing Q&A, they're teeing up the next presenter. So your backup or appendix slides would not be available. And then finally, I would just say, for short competitions, short pitches, practice your pitch many times in front of a timer. And I mean verbally, out loud. Deliver it to yourself with a timer. Know exactly what you're going to say when the slide is up and how long is it going to take. Okay, now I want to go through slide by slides what I think are the important slides in maybe like a 10-minute pitch. So one of the most important slides is the title slide. And so on the title slide, you're going to have your company name, your logo, and then what's really important here is your tagline. And I can't emphasize enough the importance of the tagline. The tagline should tell the audience immediately in a short way, such as the length of this tagline right here, should tell the audience immediately what's coming. So this is a small molecule drug for blood pressure or whatever the target audience is, or it's a diagnostic, or it's a medical device and what it's for. It should be very clear what's coming. And then the opening slide should also have the presenter's name, their title in the company, and a bit of information about their contact, maybe the website for the company. And so once you're done with this slide, and it should only take maybe less than 15 seconds to do this slide, the audience knows what's coming. They're not guessing about what the technology is. They know what's coming. The next slide you want to present is the problem slide. What is the problem or the unmet clinical need that your technology will address? How big is this problem? Describe the current state, standard of care or protocol or process that's used to deal with this problem, and to highlight the inefficiencies or gaps or suboptimal outcomes, process features, safety or market access that your company, your technology will overcome or eliminate. So this is obviously a brief slide, but it should very clearly lay out the problem and how you're going to solve it. And then there's usually maybe like one or two solution slides. So there should be no more than 2 or 3 slides here. There's going to be some data here. It's important to have some data on a solution slide showing that your technology works. A lot of early stage companies have in vitro data, they have in vivo data, there's preclinical animal data, and then a lot of times, sometimes they have human data. And so what I always recommend that you do is don't go through all of this data, only talk about the most developed data that you have. If you've got in vivo animal data, talk about that. If you actually have a little bit of data in humans, that's super important, talk about that. Don't worry about going through all the earlier stage data. So use only the most advanced data that you've got. Avoid jargon. Be sure that you define all of your acronyms. Remember that your audience will likely not be familiar with your technology, so you got to keep it simple. If you're going to use a graph, and graphic data is fine, be sure you clearly define the coordinates. So, for example, if your vertical axis is cardiac function and the units are dPdt, don't say dPdt on the vertical axis, say cardiac function, and don't worry about putting the units on there, because a lot of people in the audience are not going to know what dPdt is, but if they will understand cardiac function. So use understandable terms in your coordinates. And then for healthcare technologies, it's always important here to mention the healthcare economics assessment that you've done and whatever your reimbursement plan is. So who's going to pay for it? Are there reimbursement codes that exist that you'll be able to rely on? And that's important to mention. You don't have to spend a lot of time on it. What's important here is that the investors will know that you know the difference between healthcare economics and reimbursement, and that you've thought about both, because both are important, and they can tick that box. And then finally, as I mentioned before, don't include any confidential information in this kind of a pitch. If you need to get to that point later on during smaller group discussions, that's fine. Okay, so then the next slide that you're probably going to want to talk about is the market opportunity. And when I say market, I mean how many dollars per year are being invested or spent in this area. And so it's generally laid out like this. So it's the total addressable market, the TAM, and then the serviceable available market, SAM, and then the serviceable obtainable market is the SOM. And so it's important to make this very clear, to give some dollar amounts. Ideally, attractive markets are going to be in the billions of dollars per year. And one thing I want to just emphasize is that usually the SOM, the serviceable obtainable market, is some percent of the serviceable available market. And if you claim that you're going to trap more than 30% of the SAM, you're probably not going to be believed. So be sure that your SOM is not too high. A lot of people don't actually get down to this SOM number. They just assume they're going to get all of the SAM market, and that's really not going to be believable by investors. Okay, the next one is, what's the competitive landscape for your technology? And so it highlights your solution relative to competitors. And we always recommend using what we call the bingo slide. So it's laid out here. So your solution is the bottom row in this case, and your competitors 1, 2, and 3 are the rows above. And then there's 5 or 6 traits that are listed here in vertical in columns. And you have check marks where the competitor is doing it okay, and you have check marks where you're doing it okay. You've highlighted your row down here so that the eyes go there. And look at this. You have all of these boxes are checked, and for all the competitors, not all of them are checked in any one of these cases. So this provides a visual assessment of the competitive landscape, and it's very easy for the audience to grasp what it is that you're saying. Again, you got to be very clear about what these competitors are, what names they are, and also exactly what the trait is that you're talking about. So one of them might be cost. So low cost is a check mark and high cost is nothing. So anyway, so just be really clear about that. The next slide is going to be what we call barriers to entry. So these are barriers for other people competing in your space. And so normally this is intellectual property. And so you would want to summarize your intellectual property portfolio, who owns it, who controls it. And so your IP portfolio, you heard earlier from John Shu and others there, that these are patent applications or PCTs. You should quickly include numbers and dates and what patents have been granted and then what countries are being addressed. So if it's US only, that's okay. If you've got also ex-US coverage, you should make that clear. It's good to differentiate between composition of matter patents and methods patents. COM patents are generally more valuable because they can be applied internationally easier than methods patents. Only provide a high-level summary of provisional applications, and then other barriers, for example, specific know-how, first to market, trade secrets and other secret sauce can be valuable. And then just so outline this, but without too much detail. And then finally, if you've done an informal freedom to operate assessment, just say that. If you've done a formal one, say that, and that adds value to your presentation as well. Project plan to investor exit is the next slide. And here, what you can see is we're listing milestones. These are major milestones that are value inflection points for the company. When is that going to happen? So Q1, fiscal year 1, Q2, fiscal year 1, et cetera. And then list the costs that you're going to incur in order to achieve those milestones. Don't talk about fundraising. Talk about how much money you're going to need to spend to achieve those milestones. And here we are today. You mark where you are today. And this is exit opportunity 1, exit opportunity 2, et cetera. And the reason I emphasize the business about don't talk about specifics for fundraising, it's because you don't want to do what's known as a public solicitation of funds. A lot of these quick pitch or pitch events are public events. They're not 100% accredited investor audiences. And if you provide details about fundraising, you're doing what's called a public solicitation of funds, which is not illegal, but it makes it difficult for some investor types to engage with you after you've done that disclosure. So just talk about costs and time, and don't talk about fundraising. It's important to summarize your team. The investors, especially angel investors, value the team probably more than the technology. You should only include the key players. They should be listed in separate areas on this slide, and usually try to do it in one slide. There should be who the management team is. If you've got a board of directors, you should list them as well. And you might want to mention founders and maybe most important advisors, and that's about it. Your team members, your folks should have headshots with titles and brief bio or description, but not more than 1 or 2 lines per person. It's got to be readable. And if they have experience with other companies like Pfizer or Medtronic, put it on that slide under their name. You can also aggregate your folks in a one sentence, such as combined we have 150 years of experience in drug development, et cetera, different companies. If you can put former company logos on this slide with these names as well, that's also useful. And then finally, the summary slide. This slide should highlight all of the important things that you've delivered in this pitch. And during a typical pitch, this slide will sit on the screen during Q&A. So it really gets the most airtime of all the slides that you've presented. So you want to summarize everything here that you've delivered before up to this point. So restate the product, the problem, market size, competitive advantage. You've got whatever your IP portfolio is, strong IP, development plan, regulatory status, human data, team strength. And then your last bullet is going to be your ask. And it should be something like seeking investors and strategic partners, or some companies are looking for a CEO. Whatever the ask is should be the the last bullet on the slide. And then finally, the company name should be here, the presenter's name, position in the company, contact information, company website. Okay, so just a couple of more slides. There are different types of investor pitches. What I've just got through talking about is what I would call the typical pitch. We send companies to various showcase events, and usually they're limited to 6 to 10 minute presentations with 5 to 7 minutes of Q&A. And that's usually a maximum of 7 to 10 slides, and we've just kind of gone through that. There's also a long form pitch event where you might have 15 to 20 minutes of presentation time and Q&A in front of an investor group. You can deliver 20 to 30 slides in a 15-minute time frame. This is usually, a lot of times this is organized private capital investors or groups, and it does allow for more details. Be sure that your slides are not too cluttered with too much unreadable information, but you can include information on financials and other things that are important as well. You would also consider having this slide deck as a reading deck, maybe on an iPad, that you could take to a pitch competition where you've delivered your 6 to 10 minute pitch, and then during Q&A or subsequent to Q&A, people come up from the audience and talk to you, and you've got your iPad here with your reading deck on it, and you can go through some of the more details with people on a one-on-one basis. And again, this is where you could talk about your fundraising plans. And then there's a quick pitch event, which is usually done in a competitive showcase situation where you might have 60 to 90 seconds to present without Q&A. And this is going to be a maximum of 1 to 3 slides. And so let's talk a little bit about some of the more important things about these short pitches. So the other thing I just want to mention is the elevator pitch. This is a verbal spiel that you would deliver when you meet somebody and you say, this is what we're doing as a company. So just imagine yourself stepping into an elevator on the ground floor, and you have, people are going to get off on the 3rd floor, and you have until the 3rd floor door, the door opens on the 3rd floor, to explain to that person what you're doing. So you've got a very, very short amount of time to deliver this elevator pitch, and you've got to be sure that you have a tagline which you lead off with and say, we're developing a XYZ, and make it very clear what it is. So that's the elevator pitch. And one thing I want to just mention about developing a tagline, a lot of people have trouble with this. My advice is to start with the full pitch and then distill down backwards. So start with your 15-minute pitch and then distill it down to 6 minutes, and then think about what's most important for a 90-second pitch. And then how would you deliver that as an elevator pitch? And then what is the tagline? So sort of work backwards from the more complicated story to the tagline. And that's the tagline then is what's used in your title slide and used in all these different situations. The essentials, the title slide is super important. You got these key things on this slide. Tagline is where you're going, what you're developing. The problem solution slides are going to talk about what's the problem going to be solved, what's the market size, the technology demonstration, et cetera, who's the customer, payer, the IP, economic benefit and reimbursement, and then the summary slide, tagline, company's name, speaker's name, contact information, and then 4 to 5 bullets that really summarize your pitch, and the last one being the ask. So that's pretty much everything that I wanted to say here. This is some contact information that we have at NHLBI in case you want to reach out to us, and you can always reach out to me directly via email. Happy to engage with folks. And so with that, Marissa, I will turn it back